Yeah, for life. Assalamu alaikum to those who tune in at home. Assalamu alaikum to those who come in person. Assalamu alaikum to the sisters in the back. Assalamu alaikum to Allah wa barakatuh. We start in the name of God, the most gracious, the most merciful, and we thank Him for bringing us all here today and for giving us the wealth to talk about preservation and growth. Because without that, we definitely wouldn't be here. The first reminder is to grow up. It's important to, inshallah, be paying our zakat and giving donations in sadaqah. These two crucial elements of being a Muslim, charitable donations by choice and also mandatory donations as a requirement of our faith, that 2.5%, absolutely essential. There are multiple ways of looking at these dispositions and kind of wills come into it. A Muslim should always have a will, for example. The Muslim that doesn't have a will for more than 3 days is in sin. Correct? Correct. And we have, inshallah, local people here who are more than capable at drafting these wills. And to introduce today's topic, investment. Now, you know, last time when Islamic finance guru and Curate Capital came, I was inundated with requests to do events again. I had only intended that to be a one-off because there was no real, I thought there was no real need, I thought there was no real interest. And to find that there was interest, and I think we had over 50 signups that day for our WhatsApp group, shows that the demand is out there. A little bit about the reason why I think Wahed may be a good option for you are probably the same reasons I think it is good for me. So I am an individual stock picker. I mentioned this last time. I like to select companies based on where I think the future growth trends are, whether it's in copper, whether it's in house building, whether it's in land values. And I see Wahed as making investment easy for the masses. I'm not, championing it as the only solution. I am saying it's one of many options, but I like the fact that it is very easy to use and the manner of investing is very simplistic. Many people find it difficult to do the thorough calculations you need to do to be a Sharia compliant investor. You can't just throw your money into a stock like Tesla without doing your correct due diligence. That would be Sharia non-compliant because there's an element of speculation and uncertainty, two qualities which make an investment un-Islamic. So again, so investing in a Sharia compliant platform, it takes that complexity out of it. Muslims are losing far too much to inflation. It erodes away our wealth unfairly. And I would argue in this country that most Muslims don't have a Sharia compliant saving account. They don't have any thought about investment other than property. Now that presents a very big problem because although property prices can go up, they can also go down. And secondly, you need a lot of leverage to get into property. Without further ado, I will pass over to Abu, who will introduce you to his topic, and maybe I'll interject with some comments and questions. Abu, the floor is yours.
Okay. First of all, Jazakallah to Aziz for arranging this event and Quran Academy for hosting us here. So I want to introduce myself. My name is Abul Fazl Salahuddin. I'm the head of private client services here at Wahed. So my background is in wealth management. I've been doing this, alhamdulillah, for over 20 years now. Started off as a cashier in a building society and then worked my way up into management. And then eventually I moved into private banking and I've been doing that for the last 15 years of the 20. So that's a little bit about me. Alhamdulillah, in 2019, I was given the opportunity to join Wahed and use my expertise and my knowledge and experience to help our own community. So this kind of event is very much part of what we want to do here at Wahed, is educate our community. Now, if Wahed is the solution for you, alhamdulillah. If it's not, then hopefully the information we're able to share with you today gives you the right tools to make the right decisions for yourself. It's about empowering our own community. That's first and foremost the priority that we come with today. Okay. So now, first of all, anything that I go through today, please do take it as factual information. I'm not here to give advice. So if you do feel that you need to take advice, there are plenty of people like Aziz in the local community that you can pick his brains about as well. But yeah, as he said, no, subhanAllah, I've been part of a WhatsApp group with Aziz for a long time now, so I know that the time and effort that it takes him to stock pick and look at all the due diligence. He probably spends about 2 or 3 hours every morning looking at his portfolio, understanding what's going on, looking at the balance sheets of the companies that he's invested in. So it does
For
take
3
a lot.
years.
Yeah, for 3 years.
3 years of this work.
Yeah.
So that's why I think coming to Wahid's product, the thing I like about it is I have a few issues when it comes to my own personal stock picking. That is domestic bias. A lot of my investments, as others previously mentioned, are UK focused because I know this market, which has left me missing out on all of the growth that they've experienced in the United States. And I was actually supposed to mention this in my opening to you, that the benefit of having I'm not sure I'm allowed to use the word funds. Can we use the word funds?
Portfolios.
Portfolios. So the portfolios are structured in a way that you get breadth and you don't have concentration. So although it takes a long time, you need a lot of conviction to be so heavily concentrated in a very few areas. I hope Abu will touch upon this.
I will do. And if I don't, remind me.
Yeah.
Okay. Maybe it's the TV. Anyway, okay. So first of all, who here has heard of Wahid before? Okay. And those who have had their hands up, anybody use Wahid? No? MashaAllah. What stopped you? The brother who said no.
Just recently went for it.
Just recently went for it.
At my birthday.
Okay.
Didn't know about this before.
Okay.
Just recently I got it.
And the brothers who use Wahid, how have you found it?
Quite good.
Yeah.
Yeah. I think it's really easy to use. It's nice that it's all in one app, and then even withdrawing and depositing money is quite easy as well.
Nice and easy, yeah. So that's exactly what we want to do as part of our service is provide a way for Muslims to be able to save and invest without the headache in terms of what Aziz does in due diligence, looking at everything, and make sure that you are aware that everything is done in a Sharia compliant way from start to finish. This is not a bolt-on. This is not a window in terms of we do other things, and oh, by the way, we offer a Sharia compliant. First and foremost, we're Muslims ourselves, and so when Wahid was created, is with our own community in mind, to be able to facilitate a way for our money to grow in a Sharia compliant way. So financial literacy is very much a part of our core values. We want to be able to give access to absolutely everybody. So this is why we allow our customer base to start off with a deposit of £50. We want to be able to give you the ability to be able to start saving from as little as £50. And the reason being is that in our community, investing, there's huge barriers to entry. Okay, there's when I was a private banker, for example, I used to talk to Muslim individuals playing in the Premier League, and it was get them to invest money, and even better if I can lend them their own money and then they can invest that as well. And they used to always say to me, no, do you know what, Abel, I'd love to invest, I'd love to grow my money because it's just sitting in the bank account, but unless it's halal, I'm not going to even look at it. So I thought, okay, well, hold on a minute. I'm working for a boutique private bank. We can do quite a lot of stuff. So let me go and speak to my board of directors. And they said, yeah, no problem. No problem. We'll offer something Sharia compliant, but give us £250 million. And that's usually the case. When you are that wealthy, the world is your oyster. You can do whatever you want. Bankers like myself will create something, out of thin air if need be. But the reality is the rest of us mere mortals who don't have those sums of money to invest, it becomes very, very restrictive. And so this is why Wahid was created, to be able to provide a way for the average Muslim to be able to invest in Sharia compliant portfolios, but also more importantly, these are Sharia compliant portfolios which are created that if you take away the Sharia compliance elements of it, it stands up to scrutiny. It's available, it's diverse, it's using world-class asset managers, such as Samim Abedi. I'll talk a little bit more about him, who's our Chief Investment Officer. I mean, subhanAllah, he managed $45 billion for Google before joining Wahid. And he's just one member of the team. So it's giving people that diversified asset class, which a lot of people have probably not had access to before. A lot of people, self-investors, they probably stuck to just equities, stocks, which are easily available. Any stockbroker can offer you this. But what about other things like commodities, like gold, that we enjoy and we know and we love? What about fixed income? Fixed income is an asset class which is really missing within a lot of portfolios, and I'll go through that in a little bit more detail.
And I think from the perspective of an individual investor who does mainly equities, had I tried another way to get exposure to gold or to get exposure to sukuk, which is the halal bonds essentially, it would be very difficult to do so and be consistently applying the same Sharia compliance filter. That is kind of another benefit I see with the Wahid product, in that you can select your allocation. You can select your allocation in terms of your risk. So will you detail the kind of different risk options?
Yeah, so I'll go through the different risk options as well as the asset classes available as well. So just a quick snapshot in terms of the journey of Wahid. So Aziz mentioned earlier, we are new to the UK market. We still are. We launched in 2018, but as a business, we launched in 2015. Started offering our services to the retail customer markets in 2017 in the US. 18 we launched here, 19 we launched in Malaysia, and very soon after that, we actually launched our first ever fund on the NASDAQ. It was the first ever Sharia compliant fund on the NASDAQ. And it was purely US equity focused. 2020, 100,000 customers were here to Alhamdulillah. 2021, still seeing through the pandemic and things like that, but we hit our next major milestone of over 200,000 customers. Now, 2022, subhanAllah, was a very busy year for us. We not only hit 300,000 customers globally, but we actually launched our second ever fund on the NASDAQ, and it was the rest of the world equity, because we already had a US equity fund, which had an ESG filter as well as launching Wahid X, our venture capital arm, in 2022. Now, subhanAllah, 2023, we've been so busy, I haven't even updated this timeline yet, but we launched our Waqf fund, which is an endowment fund. We'll talk a little bit more about that. And we also acquired Ivor Solicitors. Now, those of you who are not familiar with Ivor Solicitors, they're probably the UK's biggest Sharia compliant will provider. They offer wills done in a Sharia compliant way, but they offer inheritance tax planning as well as tax advice now as well, alhamdulillah. So we're very proud that we're able to offer that under the Wahid banner as well. So the first question that we get asked a lot when it comes to our services is my money safe? And it's a very valid question, and it is always where you should be starting. When you're talking about investing and saving your own wealth, the first thing you should be thinking about is, wherever I place it, is it safe and secure? Now, the starting place to ascertain and decide whether that's the case is, well, actually, the entity that I'm going to place my hard-earned money with, is it regulated? So, alhamdulillah, today, we are directly authorized and regulated by the Financial Conduct Authority. You can see the different licenses we hold. Obviously, being a US regulated entity as well, we're authorized and regulated by the SEC. But for us, for our purposes today, the FCA is the most important one. And what that does is gives you protection. It gives you protection under the Financial Services Compensation Scheme. Now, I personally don't think you'll ever need this with Wahid, but it's there to give you that peace of mind. Let me explain why I think you won't need it. Because fundamentally, we're not a bank. We're not lending your money out. So there's no need for if Wahid isn't around anymore, for you to worry about, is my money protected? And the reason being is that when you invest with Wahid, your money is actually held by a custodian. Okay, so your money doesn't actually go to a Wahid account. And you'll see when you transfer money, those brothers who use our services, the money goes to a custodian. Our custodian is called Wealth Co. You probably noticed that on your bank statements, right? And what Wealth Co will do is, their job is to literally just hold your money. But they hold it in something called a nominee structure. Now, what that nominee structure allows is for us to manage your money on your behalf. But you are always registered as the underlying beneficiary. Now, from a Sharia perspective, that's very, very important. You have to retain ownership at all times. Okay, so that's really, really important. So you will always be the owner of the shares that we're buying on your behalf. We're just managing it for you. And what that allows us to do is then decide and use, decide where to invest that money. And we use third-party funds. This is why I say we manage a portfolio of different funds, third-party funds such as BlackRock, the world's biggest fund manager. They manage over $9 trillion. Okay, BlackRock alone owns a third of Apple just by themselves. That's how big they are. Then you've got other asset managers such as Franklin Templeton, HSBC. Now, Franklin and BlackRock make up the biggest three fund managers in the whole entire world. HSBC being one of the biggest banks in the world. Unsurprisingly, they manage a lot of money, and so they have a huge asset management arm as well, and we leverage that as well. So another question that we get asked, certainly over the last couple of years since the pandemic, is about ESG, Sharia compliance, filtering, and things like that. And there is a lot of overlap between what is ESG. Now, for those of you who are unfamiliar with ESG, it's ethical, socially governance, filtering, socially responsible way of investing. And Sharia compliance sits firmly slap bang in the middle of that, I believe. But there is fundamental differences between the two as well. So in the conventional space, when they say ESG, they say, yes, we're ESG. But then they put you into a bond. It's a green bond, but it pays interest, and it's an unsecured debt. And it's usually towards the developing markets, right? And so for us as Muslims, from a Sharia perspective, it's still unethical. So whilst the non-Muslims, they say, oh, this is ethical, but for us, it's unethical still. So this is where the divergence starts to happen between what is Sharia compliant and ESG. So let's talk about Sharia compliance. First and foremost, when we're looking at the investment universe, the rules pertaining to Sharia compliance. Now, first of all, I do need to state, we as an institution, we're investment managers, we're investment specialists. This is what we know, this is what we do. So we're not scholars by any stretch of the imagination. Alhamdulillah, we have guys who are very knowledgeable working with us. For example, Omar Salaman, who is head of risk for us globally, as well as head of Sharia. He works very closely with the Islamic Council of Europe, as well as a few other institutions as well. And he works very closely with the UN as well, and gives a lot of talks around that as well. And actually, he works with Aziz and his good friend. Exactly. So going back to Sharia compliance. So first of all, the scholars say we need to get rid of all the companies which operate within certain industries. We need to strip them out. Okay. In the ESG world, they would call this negative filtering. Okay. So they look at companies such as tobacco producers and things like that. If they're tobacco producers, we get rid of them. That negative filter then, alhamdulillah, still leaves thousands of companies for us to invest into. Then the Sharia compliance filtering then looks at the positive filters. This is where Sharia compliance really comes into its own. So we look at certain financial ratios, as Aziz alluded to earlier. So we look at the debt to equity ratio of a company. How much debt does a company have compared to its total assets? And the scholars say that as long as the debt element, it does not exceed a third. Some say 33%, some say 30%, but it's a third still. It's Sharia compliant for us to invest in. So then the next filter we apply to the thousands of companies which are still available to us because they have low levels of debt within their corporate structure is where are they making their money? From an operational perspective, where are they making their money? So whilst they may have low levels of debt, we need to then make sure that actually the income that they're earning, which in fact we will then earn as shareholders, it needs to be from permissible sources. Now, when you're looking at the stock market, generally, you're looking at non-Muslim companies listed on non-Muslim exchanges, and they're run by non-Muslims, right? So they don't really care where their income's coming from, right? So the scholars have said, when you've done all of this filtering, the impermissible income, you're looking at, in reality, interest income. That's where the majority of the impermissible income is coming from. And when we're looking at companies such as Microsoft or Google, they have low levels of debt. They are Sharia compliant. The majority of their business is conducted in terms of selling products, selling services. So we then look at, well, actually, these guys still have billions of dollars. It's sitting in cash, right? This is headline news all the time, yeah? This is why they can buy, for example, Activision for several $1 billion overnight. Well, in reality, these guys, they know their money's not sitting in the bank. They know that money sitting in the bank is not going to do anything for you. So
It
the
erodes,
investment-
in fact.
Exactly. It erodes because of inflation. And so they invest that into interest-bearing accounts until they actually need that money. And so because of that interest element, the scholars have said, as long as the impermissible sources of income does not exceed 5% of the total annual revenue of the company, it's still Sharia compliant. But 5% is still 5% for you and I, right? Even if it's even if it's 0.5%, it's still 0.5% of impermissible income. So this is where at Wahid, we provide each and every single one of our customer base with something called a purification report. Now that purification report then details the income that you've earned from those impermissible sources. We do that for every line of stock that we invest your money into. And we produce that report. But remember, we've done all the filtering. We've looked at the impermissible sources. So it's not huge amounts of money. So my ISA last year, I had probably about £10,000 in there. My purification report told me that I need to give away 58 pence. That's how much impure income I've earned from my investment. So you can see here, because of all the filtering we've done, we then are able to provide it, which isn't huge by any stretch of the imagination, but 58 pence is still 58 pence of impure income for us. So alhamdulillah, we're able to provide that report for you to be able to then give away that impure income. It then means and ensures that the rest of your investment is Sharia compliant in your hands.
So I guess the point here is an active investor would not only need to be quite specific in the type of investment he's looking for, but when he's doing his financial drill down, he's looking at debt levels, he's also looking at the turnover, what percentage of that may be from non-compliant income. And you'd be surprised, what kind of things qualify as non-compliant. For example, at Tesco, you'd need to have a look at how much of their proportion of sales comes from alcohol, and then how much comes from music. And if together the two was more than 5%, which I suspect it would be, then that investment would be considered haram. So, you have to be cognizant of the fact that if you make an active step to be an active investor, that you're placing a lot of responsibility on your shoulders. And it's that responsibility that puts most people off, and they do nothing with their wealth. And then it erodes and erodes and erodes. And as an ummah, we are less financially powerful than the other citizens of this country.
Yeah, exactly. So then, in addition to the purification report, we actually do the zakat reporting as well, because that's something which needs to be paid on our wealth as well.
Is that automatic?
Automatically, we provide that. So, last year, we provided it on one specific day. Now, if you happen to be paying your zakat on that day, then your work. What we plan to do is bring it in app so that irrespective of what day, you can then just hit the button to say calculate my zakat, and it will tell you the zakatable position of your portfolio of that given day. But what we have done alongside the zakat reports in last year is give you the calculations for you to be able to calculate it yourself as well. So again, it's still empowering you to know exactly what the position is. So that's the investment, the Sharia compliance perspective. Now, before I move on, any questions regarding that?
What's your default zakat calculation?
So our default zakat calculations would be, we follow the rulings. Sheikh Sajid Umar, who works for Sharia Review Bureau. Many of us will probably know Sheikh Sajid. He works for the Islamic Council of Europe as well as a few other institutions. He's our main Sharia liaison with the Sharia Review Bureau, who is an independent auditor for us to ensure that we're adhering to the rules set by the governing body, AOT, the Accounting Audit Organization for Islamic Finance Institutions. Now, Sheikh Sajid is of the position that your stocks elements, you don't need to take 100% because you're investing into trading businesses. And so when you're looking at trading into businesses or your own business, you don't pay zakat on the business value, right? You look at the working capital, the short-term stock elements and things like that. That's what you pay. So Sheikh Sajid has applied that calculation to be 30% of your stocks elements within your portfolio. Naturally, you pay 100% of gold, as well as sukuks, which is a debt instrument.
And to interject here, this itself is another benefit to the wide portfolio investor over the individual investor like me, because my zakat calculation takes me at least a week, because not only do I need to calculate zakat by looking at a financial report, looking at the total assets and how many of those assets are zakatable. I need to do that across a portfolio which might have as much as 50 companies in it. So, even if I do speed up that process by using, spreadsheets and stuff like that, there's still a lot of manual inputs needed. So again, one of my own interests in moving to the Wire platform is to simplify that process just a little bit.
So while the platform you're providing, it actually is automatic.
Automatically, yeah. Automatically, every single year, you'll get a zakat report, as well as your purification report. Eventually, yes, in-app. But again, if we provide you, let's say, for example, on the 1st of January, we'll provide you that report, but we'll provide you with the calculations we've used so that whatever date thereafter is your own zakat date, you'll know what to calculate and how to calculate that yourself as well.
And actually, in fairness, I remember when one of my colleagues first started using one, he wasn't able to get a zakat calculation from you. And that actually annoyed him quite a lot. And he said, well, if there's a Muslim providing me with a Muslim investment option, it should calculate my zakat for me. And I think it's interesting that the population was listened to and the product developed over time.
Yeah. I mean, definitely. I think the product that we had when we first launched, it wasn't the goal. It was just the beginning, the start. And alhamdulillah, we've developed it significantly over that time as well. And we will continue to do so. So things which you guys you want to have as a feature, please do let us know. We do take these things on board and we do bring them out. So yes.
Yeah, so my name is Abdul. I'm a little bit confused here. So if we come to this investment, basically, so the company or the when you invest, basically, or when they want to invest in, so your money, they will be investing somewhere, or they will be basically. They will ask you, do you want to invest there or here?
No. We make those decisions for you.
You're going to be guys straight for behalf of the investor.
Correct. Yes.
Okay.
So we manage your money on your behalf.
Okay. But I think we don't actually. I don't have to deal with any kind of thing or give you.
Correct.
Sorry, I am.
No, that's okay. So going back to what I was saying before, in terms of
The metal.
is it the metal? Yeah. Okay. I'll bring a plastic one. Just going back to this screen here. Yeah. So your money is held in a nominee structure. That nominee structure allows us to manage your money on your behalf.
But that means you can choose the time of the investor that you're going to go for. I don't have a say on that.
No, but I'm just going to step in here because I actually want to answer Bro's question a little bit, and I think your question links in with it. You can, as I understand it, because I'm a customer of one, you can choose your option, and you could go for I think there's 5 different types of portfolio: very aggressive, normal, and then there's a couple of other ones. And as a part of that, the allocation of different assets is different. The most risky will have more stocks, more equity. Those are publicly listed companies like Microsoft and Amazon, and they go up and down quite in a very volatile fashion. If you wanted to have a less aggressive portfolio, a less risky portfolio, then you'd have more gold, more cash equivalents, more Islamic bonds, sukuks. So it all depends on your investment preferences. The answer to your question is they won't ask you whether they have a permission to invest in Microsoft or Google or Uber, but they will ask you to decide at the beginning how risky do you want to be.
I come a lot of things. I'm looking for investment all the time.
Yeah.
A couple of times I started the internet.
Yeah.
Trading market so
Honestly, there's a lot to be said about Forex actually. So in the Sharia compliance,
I'm still not giving up, so I'm still working hard to invest.
Yeah. Well, inshallah, I hope that Brother can explain a little bit more about the different risk allocations, because really I think that will answer all your questions.
Yeah.
So, sorry, I just have one quick question.
Yes.
It might be a tangent, actually. So in regards to your filtering, you said you're in line with ESG, right? Well, you filter out ESG
Non-compliant.
non-compliant. But from what I understand, ESG has a very liberal strategy in America when it comes to forcing X number of companies in a sort of a liberal strategy agenda. Like,
Yeah.
I don't know if you've recently seen White and stuff like that happen in America on ESG.
Mhm.
So what is take on ESG in general?
So for the sisters in the back, can you just repeat the question?
Okay. So, so the brother was asking just in terms of ESG, and given the fact that the ESG is quite liberal in its application, in certain markets, especially in the US, what's Wahid's take on those kind of things. So, as I mentioned earlier, ESG is what the conventional will use to say this is ethical. So, Sharia compliance looks at ESG in terms of how they operating, what are they investing into, and things like that. But then Sharia compliance takes it one step further. So ESG is part of it, but it's not what we use as a basis. So all I was doing was just demonstrating here is that there's a big overlap between Sharia compliance and ESG.
Okay.
So some people might think that if they're ESG, then it's most likely Sharia compliant.
Exactly.
And what you're trying to stress is it's actually not.
Exactly.
Because they could be, it could be a green fund or something like that.
Yeah.
But in reality, there's some extortion of an individual, someone
Or a
losing out,
country,
someone losing
yeah.
out.
And most ESG funds, the bulk of ESG funds are in bonds, which are interest bearing. And so this is where the limitations and the divergence happens.
Okay.
Yeah. So just going back to, let's talk about our investment methodology. I think this will answer a lot of the questions that we're having so far. So first and foremost, so whilst we have people like Samim who managing the investments, he doesn't wake up one morning and decide, oh, I fancy a few extra Tesla shares or something like that. We go through quite a rigorous and robust investment methodology. Now, first of all, we utilize something called modern portfolio theory. This is what conventional investment houses use as well. This is probably an industry standard. Now, within modern portfolio theory, there's something called efficient market hypothesis. And within the efficient market hypothesis, there's something called the efficient frontier, which helps investment managers determine what's the most efficient proportion to hold in a certain asset class. Park asset classes for a second, I'll come to that, to maximize your returns whilst minimizing risk. And so this is the kind of process that Wahid goes through to determine what's the most efficient proportion to hold in a certain thing to maximize your returns whilst reducing that risk. And this is an ongoing process. So this isn't the 2017 where we created the portfolios, we set this up, and subhanAllah, the portfolios we hold today is completely different to the portfolios we had in 2017. Believe it or not, actually, the portfolios that we have today is completely different to the portfolios we had 8 months ago, because we go through these processes, what's out there, what's efficient, what's performing well, and this is continuous process that the investment committee go through to ensure that our hard-earned money is maximizing returns for us.
I think a key word you used there was efficiency. It wasn't efficient for me a couple of years ago to buy into the Wahid system. The management fee was 1.5%, and I immediately decided for me that's way too high because I'm probably paying about 0.5% in stamp duty and other associated costs. There's no point. It's now 0.5%. Just a bit more than 0.5%, 5.5, right? 5.5.
So Wahid charges, I'll go through this a bit later, but Wahid just charges 0.5% to manage your assets, to do the zakat reporting, the purification, the filtering, the ongoing due diligence, and rebalancing the portfolios as well. I'll come to that. So I'll move on to asset classes because I think that's quite an important part. Now, an asset class by definition is essentially a way to categorize a group of similar performing or similar characteristics of an asset. So Cash, for example, is an asset class. Property is an asset class. It's known as real estate. Then you've got commodities such as gold, yeah, and then you've got stocks as an asset class. But we split stocks into two different distinct asset classes. So first of all, global stocks. So global stocks, when we're talking about investing into global stocks, we're talking about investing into large blue chip companies, which are listed on developed markets. Now, developed markets meaning North America, UK, Europe, Japan. These guys have a long history, and such as the UK, hundreds of years worth of history of listing companies on an exchange for people to buy and sell the shares. But the reason we do this is we expect, and we've seen historically speaking, the most amount of growth from the developed markets. So why wouldn't we want to participate in that? So the likes of Tesla, the likes of Microsoft, the likes of Google. These are the kind of companies that you can expect your money to be invested into. And this is where long-term you see the most stable long-term returns.
Actually, I just had a point that I remembered. So if you look at what the Wahid portfolio is, it's essentially, if you use very aggressive, it's a collection of stocks. It's a collection of funds that hold a collection of stocks. Let's say, if you add it all up, it'll probably total 1,000 stocks or 800 stocks, something like that. As the market goes up and down, it's volatile. For example, when the pandemic hit, the stock prices went down, right? So just in the same way that you can time and buy individual stock at a low price, you can do the same thing with a portfolio when the market is down. Now, people often think that it doesn't work in the same way as stock. The portfolios themselves are just an easier way to access a greater number of stocks. Because, for example, let's say you're individually stock picking and you put it into one company. I did actually. I put it into a company that was in Russia and it collapsed the very next day because of the war. You get what's known as concentration risk. If you've got £1,000 and you put it in a company and that company goes down, you've lost your £1,000. Whereas if you put it into a portfolio, then there's 600 companies there. If one does bad and 10 do good, then obviously your portfolio will be more good than bad. So I think that's something to think about. Like, if you are going to look at these other options, like portfolios, it should suit your needs. And I think for the majority of the masses, these kind of products do suit their needs. And that's the reason why I invited Wahid today and then put the live stream together. And I feel like I'm doing my bit to tell people that you shouldn't take unnecessary risk when it's easy to get stable returns and to at least track the market and beat inflation. That's the main goal, track the market and beat inflation. It's not about becoming a millionaire overnight. That's what Ali's supposed to do anyway. So yeah, I'm going to keep interjecting here and there with these thoughts because, I remember asking for a product like this. For me, this product would have saved me years of hard work. Now I'm benefiting from it. But if this product was available 3 years ago, wouldn't I have put a single penny into the market in my own name? Absolutely not, because it's just such hard work. Who knows how many hours and hours of research. Even now, I'm doing probably 2 days a week at least of research. And I promise you, the benefits of investing, wallahi, I'm not kidding, they are so good. I have personally benefited in ways I probably couldn't imagine because not only do you get your dividends, but you also get the growth in the share price as well. So you're benefiting doubly. And if you bought a stock at a low price and you're getting a yield of, let's say, 6%, then when the stock goes up, your yield actually increases because you got in at such a low value. Your yield could be 10-20%. So the point is, it's actually worth investigating and researching more. And hopefully we'll do more of this kind of stuff, inshallah.
So obviously global stocks, we know that this is where you should expect the most consistent rate of return long term. But there's other areas such as emerging markets, which are up and coming, which offer phenomenal growth potential as well. So this is why we've split the two up. So we do have emerging markets as a separate investment.
Tell them what emerging markets is. Just put it out. Yeah.
So emerging markets, we're talking about places like India, China, Pakistan, Turkey, places which are up and coming. But again, because we want to manage that risk, we invest into the larger companies from these emerging markets, such as Samsung, believe it or not. Yeah. Many of us know Samsung, but because it's listed on the Korean stock exchange, it's treated as an emerging market stock. So naturally, this is one of the type of companies that we'll invest into. Reliance Industries, for example, in India, right? Many of us probably know Reliance Industries. Reliance Industries, whilst an Indian company, they own Hamleys toy stores in the UK. Or you think about Tata, who owns British Steel, Jaguar Land Rover. These are the kind of companies that you should expect your money to be invested into, even though it's an emerging market stock. It tends to be the larger, more stable companies. And the reason, whilst we have exposure to emerging markets, we don't have huge amounts invested into emerging markets. Why? Because as quickly as they've gone up, they can also go down. For example, China could decide to kidnap the CEO of one of their listed companies, and he disappears for a week, and all of a sudden stock price collapses, right? And then lo and behold, Monday morning he's back at work, and then the share price goes up. So again, to manage that level of risk, okay, so we want an exposure to benefit from the upside, but we limit that exposure to protect us from the downside risk as well.
So it's not diversity at the end of the day, right? Because that's the issue. Having your eggs in a small basket means that it's more likely to drop and crack.
Yeah, exactly. And then, as Aziz mentioned earlier, concentration risk. So this is a portfolio of probably around 700 individual lines of stock compared to,
50 or, and that's hard work. I think most individual investors would say don't do any more than 20. So, I'm just kind of putting that out there, that this is a much easier way to do it. And had it been available, like I said, I probably wouldn't have gone down that road.
Exactly. And as Aziz and I recently talked about, this is globally diverse. So you have access to countries, US, UK, Europe, Korea, India, China, through Hong Kong, Taiwan, Pakistan, Turkey. You have exposure to all of these countries. So then, therefore, you're benefiting from what these economies are able to do. Some will do well at one stage, some others will do bad, but that's the benefit, right? As Aziz mentioned earlier, something's going to go down. That's a guarantee with the stock market, but something else will always go up to compensate for that. And by having that diverse portfolio of stocks, gives you that balance, gives you that diversification to then minimize the risk as well. Now, obviously, stocks is not the only parts that we invest into. And the main reason for that is stocks doesn't always go up. For a lot of you, you've probably heard of stocks and shares, but probably feel it's more like shocks and scares, especially in the last couple of years, right? So this is where the way to manage that is we hedge against the stock market, meaning that if the stock market is going to go down, what else can we invest into, which is then going to compensate for those losses that you'd expect? Gold, exactly, right? So gold obviously is something that, I don't need to teach you guys what it is, but fundamentally it's seen as a natural hedge against the stock market. This is why gold prices go up when the stock market is going down. And so again, we want to have exposure to gold to give us that benefit so that we know that the stock market is going to go down at some point. Can't predict when. And so therefore, by having exposure to gold, gives us that ability to be able to compensate almost immediately. But alongside gold, before I move on, so gold is actually still a very volatile asset class, believe it or not. And I'll show you a graph in a minute, which demonstrates that. So whilst gold long-term is a safe haven, long-term we know and we expect asset prices to go up in gold. But if you hold it long enough, every asset class will do that for you. So another way to benefit and protect our portfolios is by investing into sukuks. Now, sukuk is a shariah-compliant version of what we would traditionally know as bonds. Okay,
Corporate debt, basically.
Yeah. So there's two different types. There's corporate bonds, loans to companies, and there's government bonds, loans to countries, right? It's a way for them to finance their spending without giving away a share of their business. If it's a country, they can't give away a share of the company itself, or the country, should I say, unless you're the Tory party and you're in with Rishi Sunak or one of his cronies. But aside from that, they're loans, they're unsecured, and they pay interest. Debt is not necessarily a bad thing in Islam, okay? But it needs to be secured, and it cannot pay interest. And so therefore, what does a Muslim company or a Muslim nation do to raise finance then? So in the early 90s, sukuks were at first introduced. And what a sukuk is essentially, it's like a hybrid. It's somewhere between a stock and a traditional bond. It still issues shares, so it's still a share, but it's secured against a physical asset. So that company or country needs to give up ownership of an asset that they own, and that asset needs to be income generating. And so therefore the income then replaces the interest payments, and your debt is now secured against a physical asset. That then makes sure that it's Sharia compliant.
Like an example would be that a country could finance all of its roads, the motorways that receive tolls, that would give up its right in those tolls that it receives. And then you, as an investor in that sukuk, would get a slice of those tolls that it receives from paying motorists.
Yeah. So Pakistan has recently done a sukuk issued against a toll road. I think it's the one which goes up towards China, right?
Yeah.
Yeah. So that's an example. Now, traditionally, it's land or property based, but new organizations are starting to diversify away from this. So, for example, an airline company which owns a fleet of aircraft, they've now issued a sukuk against the aircraft, which is now leased out to other companies. And so, therefore, we then benefit from the lease income from the aircraft fleets as well.
So does sukuk benefit from the fact that the income is sort of fixed?
Yes. So we can be assured to a certain degree. It's not guaranteed because obviously the company could default on it and things like that. But there is an element of assurity there. So, for example, it's like you renting out a property. If you have a rental property, you rent it out for a year. You can, to a certain degree, expect that income in for the next year, right? So it's that kind of assurity that you have with a sukuk.
So with a bond, you get a guaranteed type return.
Correct. Yeah.
Is this a guaranteed type return?
No. So again, because these are secured against an asset, the asset needs to be income generating. Tenants can default on their tenancy. An aircraft company can default on their payments for the leasing as well. So there is a certain amount of uncertainty there, but for as much as possible, that's mitigated by assessing who are you lending out to, who are you leasing to, and things like that.
And that's the point. I knew the answer to that because I do this every day at work. But the reason I asked that question is because you need to see that these other options are in themselves Sharia compliant. If they were to say you're going to get 5.6% every year from this sukuk, then that would not be Sharia compliant because it would be fixed. It'd be riba actually. So the solution is to link it to the economy. They've linked it in this case, for example, to toll roads, or they've linked it to the airlines. Or a mine. The main thing is the distance between the actual fund and the end investor shouldn't be very far. And I think if you see how this can play a part in reducing portfolio risk, that's also very important. If you leave with that, then we've achieved something. For example, if you're invested in the stock market, you're at the whim of the economy. It can go up, it can go down, and there's no kind of guarantee. At least gold and at least sukuk, there's no guarantee of what the price will be or what the situation will be. You're more likely, if you're spread out amongst many different asset classes, to be able to withdraw your money at once if you need it. That's the benefit here. If you're entirely in the stock market, you're at the mercy of the stock market. The benefit of being in other classes is you're spread out amongst loads of different things, which reduce your risk in the event of a crisis.
Exactly. And so,
Yes. So 2 questions.
Yep.
One, what is kind of the average return that you kind of get on your sukuks?
Mhm.
And the next one is because you obviously have control over that asset class, or say of that.
you have control.
of that or those road systems. Do you have a say on how they run? Because one they're mismanaged, especially in emerging markets, where funds go missing all the time. What element or what degree does the sukuk actually have on that?
So the sukuk. So the brother asked 2 questions. What's the average rate of return that you could expect from the sukuk, and also how much say do you have in terms of how that asset is utilized? So first and foremost, the sukuk bond company manages the actual underlying asset. Okay. Now, they will set out criteria, conditions. Aziz will probably be able to explain this far better than I do. But from the outset, they will have certain conditions that they would stipulate. So therefore, the asset cannot be used differently to what was originally agreed to. Okay. Now, in terms of average rate of return, it's quite difficult to say that at the moment, right? Because interest rates are going up, income levels are going down, and things like that. But long term, you're probably looking somewhere between 4 to 5% as a percentage. Doesn't mean it's interest per annum. Yeah, so that's the average. And so the reason why you would hold a sukuk is not for the growth potential, because obviously I've just told you what the average, income yields are from them. It's for that stability. Because your shareholding is based on a physical asset, that share price isn't going to fluctuate. It will still fluctuate, but it isn't going to fluctuate by huge amounts away from what the underlying asset value is. Okay, so it's there to provide a buffer to a portfolio. It's there to provide an element of security to the value of your investment, where everything else is going to go crazy. For example, over the last couple of years, we've seen that with the stock market, we've seen that with gold, and I'll show you shortly. So at least with a portion of your portfolio, if it's more secure, and that's going to fluctuate by maybe 5–10% compared to the 50% that you can expect from the other asset classes, you can see how we're balancing things out. Now, how much we go into each one is determined by you. You tell us the level of risk that you want to take, and that will help us to determine how much to invest into each asset class. So as he's mentioned earlier, the higher the risk you are, expect more of your money in stocks. Yeah, because that's where you're going to get the most amount of growth. And you're telling us, I'm happy to take risk with my money. And so naturally, you should expect more of your money in stocks. If you say, no, actually, you know what? I need to take lower amounts of risk. Yeah, because I'm not happy and I'm not comfortable taking a 20% fluctuation in the value of my investment, then we'll invest more into sukuks, which has a lower element of risk.
Can you split it up?
Can you split it up? Of course you can. But I'm going to tell you why you shouldn't in a minute. So just moving on. So this is just a little bit about our investment committee. Sameem Abedi is our chief investment officer, as I mentioned. So he worked at Google. He actually contacted us when we first launched in the US, and he said, guys, love what you guys are doing. I think I can help you. And we were like, who the hell is this guy? We get this all the time. But alhamdulillah, he came in. Mashallah, he was managing over $45 billion for Google at the time. And prior to that, he was at JP Morgan, he was part of a team who managed over $100 billion for JP Morgan. Now, Sameem doesn't do it all by himself as well. So we've got brothers like Omar Bassan. Now, Omar Bassan, when he first joined the investment committee, he was the head of asset management for Saudi Arabia's biggest asset family office, should I say. Now, a family office, for those of you who are unfamiliar with the term, is when you're so rich, you don't need to take your money to the bank. You just employ your own investment managers to look after your family's wealth. And that's what a family office does. It manages the family's wealth. So Omar Bassan was the head of asset management for Saudi Arabia's biggest family office, where you probably have, you're falling over multimillionaires day in, day out when you're crossing the road. So Omar Bassan managed Saudi's biggest. And alongside him, James Walker. Now, James Walker was former head of global asset management for JP Morgan Private Bank. He managed and oversaw the management of over $450 billion for JP Morgan. So these guys feed into our investment philosophy. So this is not, Abul, who managed over $100 million myself over nearly 20 years. I'm small fry compared to these guys, right? I know next to nothing compared to these guys. And these are the kind of caliber of people that are looking after our assets for us. So we looked at asset management. We looked at the different types of assets and who's managing it for us. So let's have a look at performance and how Wahed has performed in the past. Now, obviously, Wahed hasn't been around for the last 14 years. We've been around since 2015. But had we been around, and remember, all of the assets that we're investing your money into has been around for the last 14, 15 years, right?
All of the funds are at least 15 years old.
All of the underlying assets, irrespective of the funds, all of the underlying assets have been around. So what we can do is back test the data to say that had we had these portfolios in the current constituents, how would they have performed had we invested £100,000 back in January 2009 to date? This is up until the end of January. And so end of July this year. So with £100,000, you can see the portfolios, how they would have performed. And unsurprisingly, the best performing one is the most risky portfolio that we have. They're very aggressive. And the gold line is actually what's happened to the price of gold, believe it or not. So from start to finish, and going back to what we were talking about, gold we know and love, and we know that it's going to grow over time, but actually, subhanAllah, the journey in between from start to finish has been quite volatile. So again, very similar to emerging markets, but actually, you don't want to be holding a lot of gold directly, not huge amounts anyway. A diversified portfolio, something in between the top green line and the yellow line, is probably where you want to be for the majority of your wealth, because of the fact that long term, you can see the stable returns that you can achieve by investing in that way.
Just to add one thing, what you can see, if you had your money in cash, 100,000 from Jan 2009, would still be 100,000 in Jan 2023.
I would argue it'd be much less actually.
In real value,
And in real value, yeah. So even actually having your money invested in gold, even though it's worse performing than all of the assets, it's still better off than if you were not to invest.
And even then, of that 200,016, what proportion of that increase is inflation increase? I'd say at least half of that 50 grand or 80 grand there is at least that much in terms of inflation increase. So, I mean, the essential of being in the essence is to be in the market is to benefit. There's no unavoidable conclusion that you can come to. I will say this with pretty much absolute certainty, that if you are missing out on the market, you're missing out on a very easy growth strategy for your money. Because if you're involved in property, which most of our people are, there's a lot of manual labor, there's a lot of painting, there's a lot of decorating, a lot of time. But honestly, if you can see that if you put £1 in, it would be £4.75 by the end of it. There's a clear correlation there. And you'll find that if you did do that, your admin input would probably be limited to a couple of hours every couple of months, checking on the portfolio and doing the usual maintenance. The benefit of the stock market is it encourages companies to grow. And there's no conspiracy here. There's no conspiracy in terms of the stock market trying to beat Muslims down. They're trying to do this. They're trying to do this. The stock market is just a machine. It's just like the internet. It's a tool. And I feel like we're missing out on it by not using it properly.
Now, excuse me, is this for the increase in the capital, the investment, and without taking the return into consideration? So with this will be rent, will be
Dividend.
Yes, dividends will be included in this value.
No, included within that, to grow it, right?
Yeah.
So it's not only capital growth in terms of the share price increasing in value, plus the
Assuming you are not taking any dividends, this
correct.
yeah, will be
Correct. Yeah.
And actually, just to add here, one benefit of investing regularly for a long period of time is you get what's known as compounding. So your dividends will also be then invested automatically if you are doing that, which then themselves start to generate income for you. And I've had an ISA for 4 years now, and I'm already seeing the benefit personally to the compounding effect, because the growth so for example, if I sell a stock that stays within my portfolio, in my ISA portfolio, then I can use that to buy 10 more companies, which may have 10 more types of gains. So the thing is, to be in is better than to be out. That's my point.
Yeah.
And this, what about tax? Because if you don't take dividends, you will still be taxed for it.
Yeah, so I'm gonna cover off that. There's ways that you can manage that. So for example, ISA, as Aziz mentioned, it's a great way because you don't pay any tax on your income or gains. So it's definitely something that we as a community, we need to be taking advantage of. Most of us, when we hear ISA, we relate it to what the bank is telling us, open an ISA. So you think, oh, it's interest-based, it's haram, I don't want to, no, thank you. But in reality, it's actually an allowance given by the government for absolutely every single one of us to save up to £20,000 a year. And it's ring-fenced, meaning that even the HMRC say, I cannot tax you on any income or gains made from it. So imagine if all of this money was sitting and when I was a private banker, I used to look after a husband and wife. They'd retired and they'd been taking advantage of ISA allowances. Now, those of you who are older, you probably remember the old Peps and Tesses, if you remember those from the late 90s, early 2000s, yeah, when I started my career. And those were the original allowances. They started off at £2,000, 2,500. Then went to 3,600. Then, 6,000, 9,000, 12,000. Today it's at £20,000. And they used to take advantage of every single year and invest that money into the stock market. So that when they retired, they each had over £1 million sitting in an ISA. And they could take, whatever they wanted without worrying, wanting to pay tax on this. SubhanAllah. Just imagine that. Alongside everything else you're doing, just imagine having a pot of money where you do not need to worry about, am I needing to have to pay tax on this? That's phenomenal. And that's very, very powerful. And I'm 100% certain that the vast majority of our community can do ISAs, and we should be doing ISAs, but we probably aren't.
I reckon 1 in 10 people in our community is using the ISA system effectively.
Yeah.
1 in 10. And that's a system that every year I max out for 4 years because I understand how valuable it is. Because if I was to make income from, for example, if it wasn't in an ISA, I'd be paying 50% on some of the investments. So if I sold the stock, I'd be paying 50% or 45% on it.
Yeah.
So there are a lot of benefits, especially when you turn to the higher tax brackets, to having an ISA correctly set up.
And the Wahid platform provide that under the ISA or?
Yes,
Yeah, they do.
Wahid offers an ISA.
And they never used to, which is why we never have joined.
Yeah, charging structure doesn't change irrespective of what type of account you use with us. Apart from Wahid X, but we've got to pay Ali's salary because of that. Okay, so look, yes. No, your pension is a completely different tax allowance, right? So it's actually another type of way of you saving, which is even more tax efficient than an ISA. Even more tax efficient.
Because there's no limit, upper limit or lower limit. You can just transfer however much you have. That's the one big benefit.
Yeah. So
If you take a cash lump sum, there's a limit to how much you can before they do start taxing.
There's definitely a benefit to talking after.
yeah, I'll try to explain that. I'll try to explain this as best I can. But yeah, just quickly moving on. Look, I've talked about asset classes. We talked about inflation. We talked about performance. And you're probably still sitting there thinking, I'm none the wiser. I don't even know where to start. And a lot of times, people come to me and say, well, actually, brother, thank you very much for telling me about all of these asset classes, but give me advice. Tell me where to invest my money. Now, here at Wahid, we're not allowed to advise you, okay? But what I want you to think about, and one of the things that I tell my guys, I've got my colleague Fazil, who's part of my team in the background, is look, whenever you start a conversation with the customer, is try to understand their investment objective. Why are they investing? What are they hoping to achieve? Over what kind of timeline? When are you wanting to access this money? That should then help you to determine the level of risk to take with your money. So to help with that, I've just produced 3 examples. Now, we actually offer 7 different portfolios. If you go back to the previous one, you can see we actually offer 7 different portfolios. These are 3. Now, the way to think about it is, when you're looking at investing into the stock market, you should be looking to invest for at least 3 years. Why? There's ups and downs in the stock market, right? The ups outweigh the downs of the stock market over a 3-year timeline, historically speaking. This is why we say, be prepared to invest for 3 years. But we've experienced, returns even in a year. I don't know, if you look at 2020, for example, first 3 months, it went down by 30%, yeah? Subsequent 9 months, it went up by over 60%. Yeah, so you still ended up at the end of the year at plus 30%. So nobody's going to stop you from withdrawing your money if you want to withdraw at the end of that year, right? But statistically speaking, the ups traditionally, if we exclude that anomaly of a year, it's over a 3-year period. So the way to think about it is, if I'm looking to save up for a house, or Hajj, because that's getting very, very expensive now, and I'm hoping to, buy that house or buy go on hydrogen in the next 3 years, then you should be thinking something along the operating pool line. Now, the operating pool, you can see here, the vast majority of your money is invested into sukuk. In the short term, you're not looking to double your money or blow the lights out in terms of becoming a millionaire overnight. And we're not going to be able to do that with any of our portfolios, by the way, apart from YNX maybe. In reality, you want safety security of your money. You want to have some kind of a surety in terms of the value of your money. It's not going to fluctuate by huge amounts. And so this is where you want a large portion of your money in safe, stable areas, still providing you with a better rate of return than what sitting in cash is going to do. So this is where something like the operating pool, which is actually our moderately conservative portfolio, enables you to achieve that. Now, the intermediate pool is somebody where you're probably thinking 3 to 5 years in terms of timeline. You still have a healthy portion in supports to give you that stability, but now you can start to see that we're starting to ramp up the equity exposure within your portfolio. Yeah, and that's actually our moderate risk portfolio. Now, the long-term pool here, excluding the black segment, is actually our aggressive portfolio. This is where you're prepared to invest for at least 5 years, should I say. And this is where you can really start to ramp up the risk level within your portfolio. And this is where you can now start to introduce other asset classes, which I haven't talked about so far, which is venture capital, which is investing into startup companies. Now, startup companies doesn't give you that liquidity that we've talked about, where you can access your money, if it's invested into the public market. But that venture capital portion can really make a substantial difference to your portfolio, because you have the timeline, you have the tolerance towards investment risk. You're not exposing huge amounts of your money or a massive proportion of your money. You can, if you are that way inclined, but know that actually with startups, there is a higher degree of risk. But because of the higher degree of risk, you have the potential for significantly greater returns. I'm talking 20x, 20 times the returns on the value of your portfolio. Sorry.
I was going to ask, how do you keep liquidity in your high risk portfolio when you have venture capital funds within it?
No, we don't have that within that. That is, you are self-investing yourself within the venture capital. That's why I've included it within that.
Fine.
But it's not necessarily within our portfolios.
Fine.
Again, it's because of that. It's not for everybody. It is for those who are a little bit more experienced in investing. They understand the risk elements involved in it, or you're wealthy enough to be able to take that level of risk. Yeah. Now, if you're somebody and you're investing, so let's say, for example, so we've talked about investment objective, investment timeline. But for example, you're new to investing, you've never done it before, and you've got 10 grand in terms of savings. And you said, well, actually, I'm going to invest 5,000 of that 10,000. Then yeah, you could probably take some risk with that, because it's not all of your money, it's half. But if you've got 10 grand and you're thinking, well, actually, I want to invest 9, I'm going to keep £1,000 back for bills and unexpected emergencies and things like that, then I'll probably say, well, hold on a minute. You probably don't want to take a huge amount of risk with that money, because it's a large portion of your money. So maybe something like the intermediate pool, irrespective of what your timeline is probably more appropriate. So these are the kind of things that my team and I, we sit down with clients and we talk about on an individual basis, so we can start to give you ideas as to the kind of things that you should be considering. Now, we don't say to you, do this, do that. Yeah, we're not allowed to. In the UK, we have to charge for that. Again, we want to keep costs low, so we don't offer the advice, but we give you the tools and the understanding based on what you tell us you want to achieve, to give you the things to be able to make the right decision for yourself. Okay. So just moving on, I appreciate I've taken best part of an hour with this. So Wirehead, we charge 0.5% to manage your assets. Now, there are underlying fund management charges. They can range from just under 0.3% up to just over 0.6%. And then in addition to that, but that's charged by the fund managers, the funds that we invest your money into. Think of it like VAT, right? When you go to the shops, you pay VAT, it's part of the price of whatever you're buying in the shops, right? It's not a separate charge, it's within the price. So fund management costs are exactly the same. So whatever you're buying your fund for, so for example, if you're buying an HSBC fund and it's £15, that fund management charge is already in that £15 price.
So with a very high risk portfolio, what's the current combined management fee percentage?
0.93.
0.9. It's still below.
Yeah. The gold only is at, it's at 0.28.
Okay.
The gold only portfolio. So that's giving you exposure to physical gold without you having to go to the jewelry store and negotiate a price and agree a price and take that home and then worry that, oh my God, the neighbors saw me taking this gold bar into my house and am I going to get robbed tomorrow and things like that? Because this is a genuine worry. I know it is for my parents. It gives you the ability to be able to hold gold yourself without having to have the headache and the worry of physically holding it. It's held at the Royal Mint, so you know it's safe and secure. But it gives you the liquidity.
Jacket with some of the water.
Yeah, myself, Omar Salaman, and a few other senior colleagues, we actually went down to Cardiff and went down to the Royal Mint, and we were shown around. And we talked to the senior guys there to talk about the process, the logistics of how they physically hold this gold. Is it really genuinely physically held there? So this is what I mean in terms of Sharia compliance. We don't just take their word for it. We went down there and checked it out for ourselves before we actually made it available to our customer base. So yeah, so all of this is taken care of for that 0.5% or 0.49% in actual fact charge. Now, if your balance is below £10,000, then we charge a flat rate fee of £2.99 a month or £36 for the year to manage your balance. So where I talked about £50 as the starting point, don't think, I'm going to test it out, I'm going to put £50 in there. Because believe it or not, most of that £50 is going to go in fees, right? In the first year, £36 is fees, what we will charge. So it's a starting place. It's giving you the ability to start investing, but it shouldn't be where you're starting in early.
Is that a minimum deposit?
That's the minimum deposit. Yeah.
So the minimum fee is £35.
Yeah, £35, but yeah, that's the minimum. £36 actually, £35.50. But yeah, so yeah, so why? Yes.
Currently, I'm using a platform where I sell share or buy share. Again, I mean,
You get charged a trading fee. Yeah.
does that apply to say?
No, that 0.5% takes care of absolutely everything. You're buying, the selling, the custody, the ongoing due diligence, the Sharia compliance, the purification reporting, the zakat reporting. It's all taken care of for that 0.49%. All in. It's called a wrapped fee charge in the industry. So yeah, so before I hand over to Ali, who's been patiently waiting. Wahid, we offer managed portfolios. We actually have our own funds now listed on the London Stock Exchange, which is the US equity fund listed on the NASDAQ. That's not directly available to us. We're not allowed to, as UK residents, to be able to invest into that US fund. But we've listed a tracker fund of that US fund on the London Stock Exchange. So alhamdulillah, today, we're able to invest into that fund as well. Alhamdulillah, that fund has actually outperformed S&P 500. Those of you who are familiar, it's just an index in the US. It's the largest 500 companies over there. Or the FTSE 100, which is the equivalent in the UK. We've actually outperformed the S&P 500 by over 12% since launching of that fund, alhamdulillah. And essentially what a fund should be doing is tracking an ETF, which this is, should essentially just track an index. But alhamdulillah, because it's Sharia compliance, it's actually outperformed one of the best known indexes in the world. We offer pensions. We offer both personal pensions as well as workplace pensions. So if you're self-employed and you have a business and you have staff, we can actually offer you a Sharia compliant pension that you can offer both. You can take advantage of yourself as an owner and director of your own business, but for your staff as well. We offer personal pensions. We offer wills through iWill solicitors. Alhamdulillah, we offer tax advice shortly as well, and venture capital, which is subhanallah, a phenomenal segment in terms of what it enables us to be able to offer our customer base. Given the fact that for a lot of us, we want to start investing into our own ecosystem. We talk about it a lot, spending money in our own community. The Jewish community, they do this phenomenally well, right? And this is why they may be the smallest in terms of as a community populace-wise, but they're probably the most influential, because of the fact that actually they redirect their own money into their own businesses, into their own communities, first and foremost. And as Muslims, subhanAllah, we should be looking to do the same. And this is why, Wahid, we hope to be a part of that. ecosystem. We're not saying we're the only. Wahida in Arabic actually means one. So our aim, long-term vision is to be a one-stop shop in terms of should a Muslim have a financial need, we want to be able to address that and know that it's done, with excellence. Because as Muslims, that's what we should be doing with everything that we do. And in light of that excellence, I'm going to pass you over to Ali to talk a little bit more about himself and the excellent work that Ali and his team are doing. Jazakallah khair.
Before we start any questions, now we're doing any questions later.
No.
Yeah, cool. So alhamdulillah, I know we've been going on for over an hour, so I'll try and keep this to about 20 minutes maximum, and then we can go into Q&A, inshallah. So before we get started, I just want to ask a few questions. Who here has heard of WahidX before? Alhamdulillah, a few people have heard about WahidX. What do you, I'm just going to pick you out for the front. What do you know about WahidX?
That's the venture capital type.
Yeah. And why would someone want to invest in venture capital?
It's a good way to invest in smaller businesses that are just starting out to get their feet on the ground. A good way for you to actually put your money in somewhere where it can grow quite exponentially.
Yeah, so investing into smaller companies, helping them grow. Any other points?
Sharia compliance maybe, because it's a very, very Sharia compliant way of investing, so long as the company is correct, because it's more of a partnership stake in a business as opposed to debt financing or anything like that. So as a Sharia compliant investor, I might conclude that the venture capital approach is the most Sharia compliant option amongst many.
Absolutely, that's a great point. And one that we tell you on something perfect. Anything else?
I think is this much got potential of growing, so there's good potential on the chance because it's a new start.
Absolutely, yeah. So that's obviously the whole, that's I guess the foundation of the pillar, right? So imagine getting into a company like Uber at an early stage. You hear stories of someone investing $5,000 into Uber and then that growing 100-fold or whichever it is. So, the ultra wealthy, I think, as these mentioned, opportunities for Muslim investors or investors in our community. How many investors do we know that have had the opportunity to invest into the next Uber? It's only if you are, family office or ultra high net worth that you would generally have access to this type of asset class. So our mission with WahidX is to democratize access and be able to give everyday Muslims the opportunity to have those opportunities to invest into the next Ubers and Amazons of this world. Pivoting slightly to inventions and look, we're talking about Uber and Amazon, how these companies have innovated in their field. Can anyone name some of the big Muslim innovations from our time? So going on from centuries. And I'll start with algebra being one of them. The Muslim invention. Any medics in the room? Anyone in the medical space? Yes. Any medical innovations from the Muslim space?
Yeah, in the Middle Age, a lot actually, many of surgical instruments and all actually done by Muslims.
Yeah, many surgical instruments, anatomy, even in the astrology space, or even understanding the body and everything. There's so many Muslim innovations that we've had from centuries. What about in the last 30 years? Yeah, so where has our innovation gone? Right, that's the key question. That's the why. That has to be the why. Why are we not having that? So from what we look at is the previous generations or from centuries ago, we had some level of wealth in the community and we were circulating that wealth. And from that, we were able to innovate. Whilst, the Brits, I don't know what they were up to in the Middle Ages, but they weren't creating surgical equipment, right? So alhamdulillah, that's where we want to start with WahidX. Let's bring the innovation back into the community. Let's start to invest in the community in itself through equity and give the next generation of Muslim entrepreneurs a place to go to raise capital. A shocking statistic in the UK is that from 2009 to 2019, only 1.7% of venture capital funding went to founders from diverse backgrounds. 1.7%. So out of 100 people, less than 2 people. From that, what percentage are Muslim? Less than 1. I don't know.
Probably less than 0.5, I'd say.
Probably less than 0.5, yeah. So there's a systematic problem that we face where the Muslim founders are unable to raise capital from the venture capital market. Secondly, the actual structures that venture capital firms use are not Sharia compliant either. So they use an instrument called preference shares. I don't know, Aziz, if you want to explain that, or
So basically, they get a first slice. It's almost they inject capital into the company, sorry, and then they get the first preference over the shares that are being sold in the future. Is that right?
yeah, exactly. So essentially, the way traditional venture capital firms will invest is, like Aziz mentioned, the preference shares gives them protection. So if the company fails, they'll get their money out first. And in an event of success as well, they'll get their money out first. So the risk and reward is shared. And from my understanding of Sharia, that's one of the key principles: risk and reward sharing. So when we invest, if we succeed together, and if we fail together. And that isn't happening in the VC market. So even if you have a Muslim founder, let's say Fazil, wants to come up with a business, he's number one got to first convince the non-Muslim venture capital firms that his idea is good enough. And second, then he's got to conflict with his faith to say, look, should I take this money or not?
This is brand new for me, by the way. I'm loving it. I didn't know any of it. I didn't know that the conventional VC system was geared against Muslims. Yeah, I didn't know that.
Yeah, it's and also less so in the UK because we have EIS, and I'll come on to how that is actually. The UK is probably a little bit Sharia compliant than the US and the rest of the world, but even countries like the Middle Eastern countries, I don't even name any countries out, but they all follow the US model, not because it's just a norm in the space. I will move on to the next slide. So I guess in terms of Wahid and why we're doing this and our kind of advantage in the market when it comes to looking at venture capital opportunities is that we ourselves are a startup that has gone on a journey. So we started in 2015, and we raised some venture capital funding, but from Muslim families and high net worth investors that our CEO had a network with. So alhamdulillah, Junaid, our CEO, comes from a wealthy background, so he naturally had a network that was there. And the community supported him in investing in him. So we were able to grow and go through those rounds of launching in the UK, Malaysia. Now we're looking at UAE as well. So when we're looking at companies, we have a good lens as we've been through a journey ourselves. So when it comes to looking at, okay, how unique is this idea, being able to do some vetting and due diligence, we have that. Second element is through the years and through our network of where we're based, we've developed a network with incubators, accelerators, and places where you can get investment opportunities from. Having a presence in, I think we've got staff in at least 6 countries, if you include South Africa, Nigeria as well, Indonesia, Malaysia. So, alhamdulillah, that global investment, opportunities that you'll get will be much broader than just the UK. And we spoke about diversification earlier. So you have diversification of asset classes. So you've got gold, sukuk, stocks, but also regional as well. So one thing that we're able to offer is that regional diversification. And in terms of what we do with the companies, so more so than us just giving them capital and then just leaving them to it, because we have that system of being a startup and having a lot of internal resources like specialist legal advisors, marketing personnel, etc. We can provide a lot of follow-on support for our portfolio companies, which they wouldn't generally get from some of the other investors that would invest into them. We'll move on to the next slide. Okay, perfect. So this graph is just to show you the different stages of a company. And you may have heard of some of these terms before. So on there you have early stage, seed, Series A, Series B, Series C, etc. So when you hear about portfolio companies and they have funding rounds, they usually have different terms. So where we invest is at the early stage. Usually the companies will have some level of revenue, have some customers, have some traction, and have raised funds before. So it's very rare that we'll invest just at an idea or concept phase. The risk is probably a little bit higher at that point in time. The reason we invest early stages, so we do have the opportunity for the upside. Because when these companies get to a future fundraising round, like Series A or Series B, at this point in time, we can sell our shares. And that allows our investors to get some return on investment, essentially. Typically, we invest around $250,000 to $1 million, basically. And that's a collection of investors. So Our minimum investment for an investor looking to invest into a company is £1,000, but we'll essentially syndicate that together and raise around 250,000 plus. And that's essentially, making our capital go further. Previously, if an investor is looking to invest into a good deal, it's rare that you can just go to a company and say, hey, I want to invest £1,000. They want to, for them, it's less efficient to have to take on 20, 30 investors on together. But whereas when you've got Wahid X in the picture, we'll represent you and essentially manage the communications with the founder or the company and look after all of the administration.
So it's still a nominee structure.
Yeah, similar to the Wahid structure, is a nominee structure essentially. It works pretty much identically. In terms of the investment process, so we get around 40 to 50 companies applying to us every month. So naturally, there has to be some level of vetting for us to identify what makes sense, what's a good opportunity, and that goes through multiple steps. So there's a specialized team at Wahid X that deals with due diligence. But I'm part of that team as well. So my background was I was an auditor. I started my career at Ernst & Young in 2016. I did 2 years there. And then I moved internally to JP Morgan in the internal audit department and spent about 3.5 years there. Whilst I was at EY, I also did some transaction due diligence as well. So naturally, there's some level of crossover in terms of skill set. We have Demi, who joined us from Goldman Sachs. He's also, at Bristol. I think some of you might know him from the community. Mashallah, really good brother, really good solid background. So he's part of the due diligence team. Safdar Alam is our CEO. He was head of Islamic structure at JP Morgan. So, the background of the team that is conducting the due diligence is world class, essentially. We're supported by an advisory panel, which includes other fund managers. So these are some of the investors into Wahid that manage their own venture capital funds. They also provide their advice on investment opportunities before we take them to investors. And finally, we have an investment committee. We can move on to the next slide. So this is the profile of some of our investment committee members. On here, Abel's mentioned a few of them already. Umar Suleiman, who's our head of Islamic Sharia and risk globally. We have Samima Bedi, our chief investment officer. He also, as part of his role at JP Morgan, looked at a lot of private opportunities. So there's a very good eye for the deals that we do. Mark Weselin, who here is head of Just Eat? Yeah, so Mark was one of the co-founders of Just Eat and helped them get to IPO, which is listing on the stock exchange. So he has that experience of taking a company and growing it and scaling it. So when it comes to us looking at investment opportunities, they go through this panel. And only if they say yes, does it then make it onto our investment platform. A few times they have said no, and that has meant that we can't market an investment opportunity to investors. And then we have Junaid Wahid, who's the global CEO of Wahid. He's really hands-on with, mashallah, everything we do at the company, and loves Wahid X. This is really his mission, because he's been through that fundraising journey of having to go to investors and realizing how difficult it is to raise funds as a Muslim, and also not being able to raise funds from preference shares, which basically wipes out 95% of the industry. So he's felt that, and felt it being his duty to really solve for this problem. So that's the investment committee. And I want to really bring this to life and show you some of the investments that we've done. We've done 8 investments over the last year. Overall, the portfolio, if we're looking at the value, it's up around 32%. So that means if you invested in each of these companies, obviously it's £1,000 a minimum. So imagine you invest 8,000, it'd be up 32% essentially. Of those companies, I'll talk you through a few of them. The one on the right, upper right, is a company called Local in Pakistan. Anyone been to Pakistan before? Okay, a few of you. Have you stayed in any hotels in Pakistan? Well, if you've been to Pakistan, you'd know that you have 2 types of hotels. You have the 5-star hotels, which are your equivalent to your Marriott's of the world, or you have budget accommodation, which generally you don't know what you get. The lack of safety, security, comfort. Sometimes the tap might not be working. So this was a problem that this group in Pakistan identified, and they said, well, how do we solve that? Let's go and actually build a model where we can standardize hotels. So you get the same furniture, you get the same equipment, the same bedding, the same theme essentially, and roll that out across Pakistan. The vision is to go beyond Pakistan as well. So you have, the Pakistan themed room is dark green wallpaper. When they go to Oman, it might be something else, etc. And the concept of local rooms essentially is Pakistan's answer to Airbnb. So where you can essentially book a hotel and you know what you're going to get. You're going to get the same furniture, etc. Something that they've been really successful. So we invested in the last quarter of 2022. They doubled revenue in the first quarter and then doubled it again in the second quarter. So now we're looking at an exit for our investors towards the end of the year, and the uplift potential is 50 to 70%.
But why would you exit? Why would you not keep that?
No, it's an option to sell.
Okay.
So investors, if they want to sell, they can do, because obviously the investment, let's say £5,000, for example,
Yeah.
you might want to take some of the risk off the table.
Right.
You might want to sell half of your shares and then leave the remaining in. Personally, I'm leaving all of my investment in because I really see this being huge in the long term.
And the shares that are going to be released, are they going to be released to the Wahed X current user base?
So initially, we released them first to our user base, but then also back to market as well. But it's really, yes.
So what's the typical timeline for how often you give your exits to?
So in terms of typical timeline, we're looking at, conservatively, we say 3 to 5 years. What we're seeing is a few of our investment opportunities are having like local, that's a 12-month potential turnaround. But we generally say to investors that expect a 5-year holding period for maximum return, or for this is generally how the VC market works from the stage that we invest, because we invest a couple of years in when the company's already launched, etc., etc.
Yeah, so you said that potentially you're going to have an exit strategy by the end of the year for the role.
Yeah.
As an investor, as an initial venture, would you take that money and invest somewhere else, or do I have the right to withdraw that money from?
So you have the right to choose. So just one distinction with Wahed X is that this is a platform that sits outside of Wahed at the moment, wahedx.com, and it's one where you choose what you invest into. So it's, I think the brother asked earlier, do you have a choice? So this is a platform where you have a choice. So on a monthly or every 6 weeks, we present an investment opportunity to you. We do a webinar, with the founder, so you can ask questions directly. And then once that's done and the investment's live, you choose if you want to invest or not, basically. And so if you wanted to, some investors have invested in like 1 or 2 companies, or some have not even invested, but just have an account, so they're just waiting for something that they like. And yeah, so does that answer the question? Or
At least you have probably answered now is that if you have wanted to leave the money there in the account and you're waiting for the opportunity to come, you can still do that.
Yeah, exactly. So let's say, for example, you invested in local and you invest, let's say 1,000 as an example, the value of the shares increased to 2,000. You sell 1,000 of that. You can then, that sits in your e-wallet. You can choose to either withdraw that back to your bank account, or if you see another investment opportunity that you like, you can reinvest it there.
And is there a charge just to join the platform, to join Wahed X? And what does it look like going forward from there?
So there's no charges to join the platform. So if you want to, you can actually join wahedx.com. It's completely free and see all the investment opportunities. There is a charge there's 2 charges that take place once you invest. One of them is an investment fee. So that covers all of the due diligence that we do. Every transaction we do goes through an external Sharia review. So an external Sharia team, we have to pay for them to certify as Sharia compliant. And then we have a commitment to provide you with quarterly reports post-investment. So all of that service essentially costs 7%, a one-time 7% fee. If you compare that to how investment funds work, they charge 2% a year, and the life cycle is 5 years. So our model, we've tried to make it cheaper essentially, but it's still obviously it's much punchier than what Wahed charges because of the level of work we have to do. Legal structuring, as these will know, is not a light task when it comes to private companies. It's
very expensive.
And it's expensive, yeah. So maybe you should start working with this.
Maybe 7%
Or charges 7% per transaction.
So if I chose to go into it, can I make you share another 7%?
Yes, basically. So if you invest £1,000, for example, £70 of that would cover your investment fee for economy. And then if you do cash flow, then
when do you take it? At the beginning or at the end?
At the beginning.
At the beginning.
So let's say you wanted to go 1,000 again at some point, you still have to get that 7% again, because obviously the situation may have changed since the last time you paid that 7%.
That 7% is ideal.
Per deal, that's what I'm saying.
Yeah.
Uh,
Even if if the due diligence is done on a new deal,
on a new deal.
that's why.
And then withdrawing is tax.
Withdrawing, so this is a good point. So we'll go on to that in a second. So when you withdraw, it's your responsibility. So the money we give you the money in full in your e-wallet. It's your responsibility then to declare that tax. Essentially
Through self-declaration.
self-declaration.
I'm sure all of you will be doing it. All of it. Immediately doing it as soon as you get
Yeah, we all love paying tax, right? Before we go on to that, you know, and then in terms of profit, so the 7% fee actually, as high as it sounds, that's what covers the cost of us operating. How we make our profit or the profitable side of it is the carry fee on exit. So that is the profit fee you charge once you make a profit. So imagine you invest £1,000 into local, for example, the company does well and it sells for 2,000. You've got your profit is £1,000. We'll take 15% of that.
1.5.
Yeah, 1.5. Yeah. And this is the venture capital space. Like this is in line with the market charge is 20% actually. So ours is we've reduced ours to 15 essentially
So it's 7% at the beginning, 15% at the end.
yeah,
And it's only beginning.
only on gains, yeah. So not on any losses.
So capital is excluded from that. So you put in a
So probably yes, the carry is profit.
yeah, just profits only essentially. So one of the obviously you can see a lot of UK companies on there, and the reason we do a lot of UK is because number one, it's a developed market. Two, you know, there's significant tax benefits that you get with investing into UK startups. Anyone heard of the EIS scheme before?
Yeah, in fact, this is the most important thing of this whole one presentation. Guys, pay attention to this particular slide in my opinion.
Yeah, so when it comes to startup investing, we spoke about the Islamic angle. We spoke about our focus on Muslim startups. Alhamdulillah, 7 out of 9 startups that we funded have been Muslim founded, which is much higher than any other provider in this market. One of the key reasons, or one of the key benefits, is this EIS tax benefit. Essentially, the UK government wants to incentivize investment within the country. Post Brexit, this has only just been increased because UK is no longer part of Europe. So essentially, when you invest into a UK-based startup, HMRC essentially gives you a 30% tax relief. So that £1,000 that you invest, £300 of that HMRC essentially refunds to you or reduces your tax bill.
That should go some way to cover the 70% charge. Right?
Yeah, essentially more than covers your 7% charge. If you hold the shares for more than 3 years, there's no capital gains tax. So imagine that £1,000 investment does go fivefold as an example.
Wow.
All of those gains are yours. And in the event
Besides the 15%.
besides the 15%, yeah.
Is that only for UK based?
That's only for UK based.
They need to be EIS qualified.
Yeah. And thirdly, if the company, in the event of a loss, HMRC gives you a further tax relief, which you can offset. So if we use the example of £1,000, if you get the 30% tax relief, what is your net investment or capital at risk? £700. Let's say the company completely fails and you lose all £700 of that. You can essentially take that £700, multiply it by the tax rate that you pay. So it's 40%, 700 times by 40%. Anyone quick maths? 300 and 280 pounds. Is it 700?
Oh, yes, 280.
Yeah, £280. So you essentially get those £280 back from HMRC. So essentially, you minimize your capital at risk is somewhere around £400, and your potential gain can be 5 times, 10 times plus essentially. So this scheme is really one to consider if you are paying tax or paying a lot of tax. You want to limit the amount that you're paying to the UK government, fund some of that towards an investment, a Sharia compliant investment. Another side of this, which is more technical, is the capital gains tax deferral. This is something Aziz and I spoke about on the phone. So imagine you've made some sort of gain from a property sale, and you've got some capital gains that will become liable. You can essentially invest that into an EIS scheme and defer having to pay that capital gains to HMRC essentially.
You can invest that gain that you've made and pay it later on after you've made a profit from those specific funds.
But if you hold it for 5 years, then you pay nothing.
No, you still have to pay the original the original liability.
Yeah.
But this is a great read. Think about it from this perspective. Just for the assistance. Sorry, this is tax relief is a passion of mine. Over 20 years, subhanAllah. But think of it this way, right? If you sold an asset, you have to pay that money away, right? The tax money, yes, right? Imagine being able to invest that money. So essentially, you still got control of it. You still owe it, but you can invest that. You can then make money from it, and then at the end of it, take any profit that you've made from that, then still pay that. So it's dead money anyway, but it's a phenomenal way to be able to utilize that without the taxman getting it straight away, and you getting benefit from it. So this is, honestly, the EIS and other types of tax relief is something as a community we need to be maximizing to its entirety.
Basically, comparing that against
100%. It's called CGT deferral.
immediately once you sort of become liable for that.
Yeah.
The deferral, how long is that? Is that
As long as you're holding the investor.
so it's almost indefinite as long as you're holding.
Exactly.
Are all of these advantages automatic, or do we have to apply the way to?
So that 7% essentially, that fee that you pay, that's us. We cover all of the administration, all of the manual forms that you send to HMRC and everything. So we have a team that looks after all of that for you. So you can rely on what export that.
And that's done for you using the platform.
Yeah, via the platform. Yes. Once you've invested, then we have obviously access to the information. We submit the forms to HMRC for EIS, get the approval, and then they'll then. We do need some information from you, so like your national insurance, etc., so then we can do things.
You're basically using money
To make
invest.
money.
Basically,
I like to think of it, it's your money, not the tax money.
Question: what if you lose that capital gains tax in your investment?
Yeah,
You still have to pay or not?
So it's still liable, but you can offset it, right? So it's still a loss.
it's a loss upside.
Yeah. So therefore, you can then offset that loss against your liability. Yeah. This is the beauty of you can really have your cake and eat it. I mean, genuinely.
Sorry.
Well, yeah, I want to give an example. Yeah, use an example. Yeah.
say you've invested that, you made profit for 4 years, and in your 5th year, you've lost all of it. So you can offset your original capital sum against the loss in the 5th year, and the taxman will be able to cover.
Yeah, so okay, I'm going to keep numbers easy here, right? So imagine you've got £100,000 tax bill.
Yeah.
You look like a man who probably has £100,000. I love my man, exactly. So what's your capital gains tax liability? Your capital gains tax liability is going to be what, 25,000? Yeah. So imagine you invest that 25,000. You then get 30% back in terms of EIS relief. Then the remainder is what is essentially at risk. So if you lose that 70%, I can't do the maths right now, but essentially that's what you can offset against your original capital gains tax liability.
Yeah.
Yeah.
Aziz, you want to give it a go, explain that as well?
No, so what I would say is about my education was slightly different. What I'm saying is, if I'll give you my example. So I have a general investment account.
Yeah.
And I used to use it ages ago, buying shares, because there was a cheaper method of buying shares. It sits outside of my ISA portfolio now.
Yeah.
I'm waiting for those shares to reach a certain amount so that when I sell them, I can do something with it. But there will be a capital gains tax liability on them because it's above £12,500.
Yeah.
So let's use, is it 6 now?
It's 6.
It's 6 now.
Sorry.
I said, when? You're kidding me? God, I didn't even know that. Wow, okay. So, sorry.
I was going to say, what happens to a limited company? Because then you just take profits from this.
So if you're a limited company, this only applies for personal tax. So if you're a limited company, the EIS scheme doesn't benefit you. You have to invest under your name. But if you're a limited company, then we can talk about what we can do for you. Basically, that's separately. Yeah.
Yes, so just to clarify to you, so let's say that within that, so the £6 grand profit I made, That would be chargeable under the CPC rules. Okay, seven, let's say seven. 7 grand would be chargeable. Instead, I move it all to 100x.
Yeah, that's 7 grand.
If that whole 7 grand is lost, am I still liable to the tax man for my 7 grand capital gain?
Yes. No, it's offset.
So completely offset. So that's the one benefit. So that's what I wanted to clarify. So if I gamble the tax man's money and lose it, I don't need to pay it.
Yeah.
If I keep it, then I pay the original amount due and keep the rest. That's pretty good.
Let's avoid gamble when the money.
Yeah.
Sorry. That 7,000 that Aziz just invested.
Yeah.
30%. Say he hasn't made a loss, but he's making a loss.
Yeah.
So I think you said something about a 30%.
Yeah, so I was just, without getting too technical, but in reality, remember, you've got the 30% back. So you can't offset that against your losses. Yeah. So it's not the full.
Okay, so you've got to pay that 30 back.
Yeah, you still got to pay the 30 back. Essentially, you're still going to be net better.
Yeah.
I was just asking whether if you made profit on the 7 grand,
Yeah.
do you pay taxes on the profit, on the gain?
No, just your initial 7,000.
So that's it.
Yeah, because EIS is still, if you hold the shares for more than 3 years,
Yeah.
there's no tax on that.
But what
Your initial,
take 15%.
yeah,
Yeah.
well, we take 15%.
He's got a grudge now.
This is how we can get down to Bristol.
Don't miss that 15%.
No, but look, in reality, look, if it's through an EIS, you've got 30% tax free.
It's all
15% carry,
Yeah.
7%, you're still better off.
Yeah.
You're still 100% better off with the 30% relief. And that should go
you should
something.
pay a salary.
And
These guys are
that's
Very
very
high.
high.
That's all it is, a salary. Yeah.
And it's getting to be like, yeah, it doesn't scratch the surface of it.
Okay, perfect. So this is the last slide, Alhamdulillah. And this is just to bring it to life. This is one of the investment opportunities that we have live right now, which is EIS qualifying. It's available for about a week because EIS deals generally, as you can imagine, are more popular with investors. The company has been around since 2019. Essentially, it's an electric vehicle rental company that has built remote driving technology. So essentially, what that means is, has anyone heard of the company Zipcar?
Yeah.
So Zipcar essentially allows you to go on your phone and book a car, and you can go pick it up and drop it off, like on the road. Fetch car essentially is a competitor to Zipcar, but it allows the car to be driven to a location. Similar to how you book an Uber, you can book a fetch car and you can come here. So if these 1 to 2, you could book a fetch car, you can come to the masjid, pick him up, you can go home, do his groceries, go home, and then just leave it there, and they'll come pick it up. So that operates using remote driving tech, where they have someone in a control room. If you can see the image over here, he's driving the vehicle, similar to a video game, from base to the customer's house. Right now, there is a safety driver in the car, but the plan is they're working with the government to build towards having autonomy in driving. So we're investing in this company. It's Muslim founded, and essentially, the technology they have is patented. So our thesis on this deal is that we don't think they'll be the next Uber of this world, or they have the scale to reach that, but we do feel that the technology, as it's patented, holds some value. The team has very specialized skills in the car space, but also in the technology and mobile telecom space. So what they're doing is, for that car to be remote driven from base to the customer's house, they managed to combine O2, Vodafone, EE's networks so that the car stays connected whilst it's on the road. And alhamdulillah, that's something that's been really a big breakthrough, and they've tested it with over 1,000 miles in Milton Keynes. The government's given them huge grants. They've been featured in the BBC, Evening Standard, and many other papers. They've also secured funding from some of the top venture capital firms in the world, such as Techstars, Entrepreneurs First, and Cybernetics. So alhamdulillah, we managed to secure an allocation where we also have a £250,000 ticket for our investors to come into this round. So how it sits versus our other investments, it's revenue generating already. They have the patents in place. They have the license to operate in the UK. They've signed agreements for 2 cities in the US as well. So there's a huge potential for long-term growth. It's probably one which is not, you're not going to see a return in 1 or 2 years, but more so 5 years, where they're likely to get an acquisition or potential for acquisition. And from the other side of things, it has all of the EIS benefits. So it's one where we see, look, it's a good opportunity to get into early emerging technology. There's a huge race towards autonomous driving, so there is a level of competition in the space. But where these guys have a moat, or what we say, what differentiates them is that remote driving technology, which they've patented essentially. So yeah, that's this investment opportunity. Any questions on this one? Anything you would think, or any thoughts?
Insurance?
Insurance, so that's similar to how any sort of hire car works in a similar way. Yeah, it's included within the cost. From the cost perspective, it works out to be cheaper than Uber. So if you're driving this over a 20-minute plus journey, it works out to be cheaper than Uber in the long term, basically.
The laws are on it are still really, really grey, aren't they?
So that's
that's the bit where you have to.
The laws are great, but they've been working with they've worked with like the UK authorities, so DVLA, the local council, government. The reason why the government is supportive of these guys is it lowers carbon emissions, and for the UK to get net zero, having these types of providers that are car sharing lowers the number of cars on the road, and promoting electric vehicles and electric vehicle use is something that the government wants.
Where's the current technology deployed? Is it just London, or is it?
Yeah, Milton Keynes at the moment, so just outside of London, and they're looking at expansion to Northampton and also Luton. Specifically, they're working on a partnership with Luton Airport, because Luton Airport is one which is not so easily accessible. Having that arrangement with them would mean that customers can just drop off the car at Luton Airport, and then it is essentially the next customer can pick it up or whatever.
Did you say that it was changes for 2 cities in the US?
So they've got the agreement to launch in 2 cities in the US, or 2 states, Detroit and Los Angeles. These are both, big cities where public transport isn't perfect. A lot of the target market will be cities where, there isn't a great infrastructure for public transport. Like something like London, for example, it wouldn't be immediately in the roadmap. Another region they're targeting is Saudi as well. Saudi is building 4 or 5 huge gigacities. So having that, they have a huge push towards, being net zero as well, and they're actively pitching to Saudi as well. And the benefit of us investing now, like, the parent company will own all of those entities. So regardless of where they go in the world, we're investing now at a stage where we'll have ownership of everything.
You mentioned the 250,000
Yeah.
or headaches has been allocated. Does that just go as soon as it's full with investors, and then what happens if you actually don't have the 250,000?
That's a great question. So we haven't had any situation where we've not reached our target. We'll just leave it on for long enough. Sometimes it takes 8 weeks, but sometimes it takes a little bit longer for us to fill. But because we've got such a large UK investor base now, 10,000 plus investors, it's usually, it's something that we fill. If we do hit the target, then either we have to close the deal, or we can then renegotiate with the founders to see if we can get an extra allocation. So we did that for a couple of deals. But yeah, it just really depends.
So as you grow, as you expect the company to grow, then would you then try and get more funds if they start going quicker and quicker?
So the way it works is each company has a fundraising round. So the founders aren't constantly open to investment. They have a specific fundraising round. So this fundraising round of giving them capital will help them get more cars on the road, help them launch in the US. So the founders, you don't want them to be constantly fundraising. It's like constantly trying to sell a house, right? You can't do anything else if you're constantly doing that.
The more they fundraise, the more they dilute their holding in the company.
Yeah.
So they want to fundraise as least as possible to get going.
I have a question for that. How do you avoid dilution? There's several.
Yeah, that's a great question. So
Do you have a say in future dilution?
so that's the thing. Dilution, protecting against dilution is anti-Sharia, right? So imagine Aziz owns a business and he owns 80% of it, and then I come in as an investor and I own the remaining 20%. If I say to Aziz, look, I don't want to be diluted, what's going to happen is the next round he's going to be diluted. So his 80% is going to become 60%, but then my 20% remains.
You could preemption it though. Have preemption, right?
You could, but even then, it's you can have rights which says that, okay, if you put in additional capital in, then you can protect against dilution. So what we will do for every company that reaches future fundraising rounds, like we're allowing investors to exit, we'll allow them to invest more if they wanted to protect their shares from being diluted. So it really just depends. That's why we're so keen to have those liquidity options where you can sell your shares, because if you want to, you don't want to get diluted, you can exit, right? And if you want to invest, if you still believe in the company and want to keep your shares, you can invest more basically. Does that make sense?
Yeah, absolutely. Yeah. Only one thing about that business structure that I would be like worried about in terms of UK market. You know, by 2030, most of the cars are likely to be electric. For example,
Yeah.
Enterprise, rental cars, all
Yeah.
those cars, they're all going to be electric. So in terms of, you know, pushing net zero, the main competitors in the driving rental space, car share, all those, they'll all be electric cars.
Yeah.
So obviously the thing that is unique is obviously the autonomous driving aspect.
Yeah.
But again, there are some major competitors in that space that are, for example, Google and all these companies that are running around.
But then, I'll send you the full deck so you can have a look at that. But in terms of Google getting to a place where they can have autonomous driving, it's still 10 years, 5 to 10 years away. Right? There's certain things that need to happen before that. So what these guys, FetchCar, built is a framework to get to that spot. So they started with the remote driving angle, then it's with a safety driver, then it's removing the safety driver, and then it's building towards getting autonomous. So having the patents, or I'm working with OEMs as well, original equipment manufacturers. There's some value there, you know, where they could, as like I said, we don't see them being able to outdo Uber when it comes to being autonomous, but there's something that potentially Google could acquire when they get to that, where to help them get to the stage of being autonomous.
If they expand to the US, would that be under a separate US entity, or would that be under a? So let's say I invest, right?
Yeah.
And they expand to the US, those 2 cities we were talking about. Do I still? So how would the structure work? Would there be a separate entity set up in the US, and would my shares be transferred, or is it just the UK company itself?
So the UK company would be the hold code that holds all of the other companies. Whenever you set up in another country, the structure usually is that you set up a local entity, but us shareholders in the parent company would always have that. And our legal agreements prevents any company from setting up an entity that does the same thing without, because imagine you can invest in a company, like you can invest into Aziz's company tomorrow, and he just takes our money and sets up another company, and we don't own that. So our legal agreements are built in a way that prevents that from happening. So you can, where you invest in this company, you'll always essentially own all of the other entities.
Yeah. Basically, the holding company owns the subsidiary around the world.
I think we should move to the general question section now.
Yeah, cool, perfect. So
Can I just ask, in terms of risk,
mm-hmm.
what are the risks?
Yeah, that's a great question.
There are some,
Should I go back into the portfolio companies? Let's go back into portfolio companies. So this is high risk. This is ultra high risk. If you go onto our website, it says don't invest unless you're prepared to lose all the money that you invest, and that's from the FCA, right? It's at that level where these companies could completely fail. How we mitigate against that is obviously very rigorous due diligence before we invest. For companies which are pre-revenue, we don't give them all of the funds up front. We'll stagger it and give them milestones to hit, and then they unlock that level of capital. So Finance, for example, equity-owned financing company in Europe, that's what we did for those guys. And then, it's regular monitoring and review. So on a monthly basis, our team will speak to the company, understand the metrics, etc. If we see things going, not as they expected, then we try and step in and provide support and guidance, essentially. So we have those measures in place that can measure risk, but obviously, if all fails, that that could essentially, there isn't anything that can protect us from complete failure, essentially. What we have seen is, all of the companies that we've invested in have a level of stability. A year on, some of these are a year on, they're still quite healthy. There's good cash flows. Some of these companies are already profitable as well. One of the key things that we would recommend is diversification. So to manage that risk, if you are looking to invest in this space, we do say that, a good measure is to aim to invest into at least 5 to 10 companies over a few years. So you're not having your eggs in just one basket in this asset class, essentially. And as Abel mentioned earlier on, out of your overall total portfolio, 15% is on the upper end of what you should consider investing in this asset class. Some private investors go as high as 30%, but it'd be somewhere between
Mine is 7%.
10% is probably
So everything I've invested, property, shares, gold, everything, only 10% of that will be allocated to this high level of risk category.
Not to interrogate you further
Yeah,
on
yeah.
how you do things, but obviously you're not an expert in the hotel market, you're not expert
Yeah.
in, maybe you're experts in the financial market, but our other ones on the board there, you may understand the basic fundamentals of business cash flow and at that kind of numerical level, but in terms of the industry level and where it's going, its direction, where it's who do you seek advice from? Because obviously internally you won't have people who are experts.
Absolutely. So a lot of our companies are fintech in here. So the fintech ones are, we have that level of expertise. We're a fintech ourselves, so that's our bread and butter. When it comes to companies that local, we've got another company called Halal Booking in Turkey that's coming up soon. Then we consult. We pay like that. Part of that 7% is paying for external advice, going to lawyers that know the space or local counsel essentially. Like for local, we had people on the ground in Pakistan to go and make sure everything's done appropriately. And then we have an advisory panel as well. So I don't know if we don't have the profiles of the advisors not on here, but some of our advisors would have that network. So when it comes to the hotel space, we can speak to somebody in Airbnb. The Wahid network is so broad that, for example, I don't know if you guys have heard of Kareem, the taxi service. The founder of Kareem is one of our shareholders, so we have access to him. The founder of Truebill, which is one of a Muslim-founded unicorn in the US, $1 billion valued company, they're part of our network. So we can pick up the phone to these guys and say, look, we need to understand this market more appropriately. But more so, we'll go and pay for reports or whatever it is. If it goes through, if you go back to that due diligence slide. So once it gets through the stage of okay, so you've got application and screening, stage 1, evaluation, preliminary investment committee, stage 2. Stage 2 is where the more in-depth stuff happens, where we're having to pay for reports, etc., to understand the local market, get counsel on board, etc.
So we're only paying for the reports once we've decided that actually it's still worthwhile pursuing, right? So we don't do it at the offset because then it's just cost for no reason.
Yeah. So exactly. Does that make sense? Or
Yeah.
So how long will that take? Long to speed to go working well?
we were finished now. It's Q&A.
No more one and the next, but
What's that?
I want to quick join you.
Yeah.
How long will it
but I will talk you through the process.
You want to sign up now?
Yeah.
If you speak to my colleague Fazil, he can help you with that. If you need to get to work, Fazil's sitting over there. He can help you with that.
Yeah, you can take one of these. This is Wahid X.
Yeah.
Fazil is ready to go work.
I think you maybe needed this one or so.
Oh no, this one. But you've only got one.
Have you not got the make it? The mega? Really?
Yeah. Cool. Any other questions?
Start with the iStar. With the iStar.
Okay, perfect. There you go. Thanks a lot, guys.
Jazakallah khairan.
Oh, we've got time.
Sorry, you wanted to ask a question about ISA?
Yeah, how can you start ISA with Wahid?
Yeah, it's as simple as download the app. Yeah. One of the first questions we ask you is what type of account do you want to open?
I see.
You will have the option of a general investment account or the ISA. And it's as simple as that.
So the general investment account is like a standard, imagine it as a standard bank account that holds all your shares. That's a general investment account. And ISA is your £20,000 a year allowance that the government gives you. And you can open it with these guys, and it does make it relatively clear.
Right.
Yeah, and then you just put the money in that way. And any gains, they don't get taxed.
Another question, if you are selling shares,
Yes.
what I understand, you were talking about £12,500 capital gain tax, you are free.
It's 6 now.
It's 6,000 now, but it's completely tax free. You don't need to worry about it.
So if you sell shares up to the value of 6,500,
Or you can make £1 million. If it's in an ISA, you don't need to pay 1 penny in tax.
Right. If you are not an ISA, you are already holding some shares.
Yes.
And you want to sell it.
Yeah.
What is the situation?
So you can realize gains of up to £6,000 this tax year. So you don't have to sell all of the shares in one go.
Yeah.
So what I would normally suggest is that you work out your notional gains position.
Yeah.
The stockbroker should be able to help you with working that out. And then you sell as much as you need to be within that allowance.
Yeah.
And then you start funding. And then if you've got further gains, then you can sell them down over a period of time. Otherwise, you just pay the tax. I mean, it's entirely up to you, whichever one you feel more comfortable doing.
That's what the market X, when you give the companies, investors, what resources do we have to sort of do our own due diligence? On
Yeah, great question. So before we do any investment, before you choose to invest, you get access to an investment memo, which is written by us, with about 40-page report, an investment deck, which is provided by the company, and the webinar. Those are the key basic pieces of information. If you want further, financial, in more in-depth financial statements or forecasts, then you can request further bits of information.
But the webinar will be with the founder as well as Ali usually.
And then if you want to book a separate call with me, I do that for investors as well.
Just follow up question. So on the investment,
Yeah.
so is there's a minimum period, or are you fixed in, locked in, can you take it out? What's the flexibility?
So just with the one that there is,
One
but with other stuff, the position is different. So which one are you questioning?
Yeah, so with Wahid X, it's your money's locked in, essentially. I would say, conservatively, we say to investors that expect your money to be illiquid for a period of 5 years. Right, so, worst case scenario, let's say the companies that make exit opportunities, could be that, essentially it's locked in. If we can't find a buyer for these shares. But, what we've seen is, in the market, that generally you should see exit opportunities around 18 months to 3 years, basically.
But
So
still,
as an absolute minimum, I would say expect to hold for at least 3 years.
But still within locked into the account.
Yeah.
You can't stand with no.
Yeah. So just have that expectation.
So let me just clarify. Sorry, it's not locked in the account. If you've exited, it's gone back to your wallet. You can withdraw.
Yeah.
You can withdraw it, but
But just remember, with the EIS, you want to hold it for 3 years, so there's no tax. So even if there is an exit opportunity so early, you probably want to hold on to it because the exit opportunity will usually mean that there's a higher valuation. So you've made money on paper already. Now, the chances are you'll get a further one soon after, right? And if it's after the 3 years, that's the sweet spot that you really want to aim towards. So anything up to 3 years is white noise as far as you're concerned. You just hold tight. After the 3 years, that's if there's a further opportunity, which usually is the case, that's when you want to exit, because then you have no capital gains tax appeal for liability.
the other question that they have is that you have the two accounts, one investment account, one ISA account.
No, so they're both investment accounts. One's a general investment and one's a stocks and shares ISA. So, but they're both the same thing.
You have about 20 grand per year, right there under the account.
Correct.
There's no point of going into a general investment unless you have reserved that.
No,
Yeah.
so
Or if you want your ISA somewhere else. That's
yeah, no,
that's fine.
I disagree. So I regularly speak to clients, and what they do is say, look, I've got £100,000. Yeah, I want to invest it. So what I suggest to them is we set up both the ISA as well as the general investment account. The ISA gets funded with 20. The remaining 80 goes into the general investment account. Now, every year, what I then work with the client is we just move 20,000 from the general investment, utilizing some of the original capital plus some of the gains. So we're utilizing capital gains taxes here, and then we just move it over to the ISA. So then over the 5-year period, all of that £100,000 will be in the ISA. But you're investing today to start because time in the market is better than trying to time the market. I think Aziz will probably agree with that.
I
After 3 years.
agree. So that 80% that's in the north,
80,000, yes.
So 80,000, sorry, yeah. If you were to withdraw less than 6,000,
Yes,
that would not be taxed, right?
correct. There's
So
no
every year-
tax
Yeah.
liability.
So every year, let's say you take less than 6,000 out.
Yeah.
And then obviously you're using your own income,
Capital, yeah.
own
Yeah.
capital to fund the rest of the 20,000 every single year.
Yeah.
Slowly, you're chipping away at that.
Exactly.
That
That's exactly why you do it.
Well, mitigation, I didn't know about that.
Level, you can invest that into,
Yeah, it's basically a loophole.
yeah, basically.
Yeah, it's called, I mean, in the industry, we call it an ISA feeder. Just use the general investment account as an ISA feeder, yeah.
Yeah, ISAPIDA, yeah, that's what it would be.
Yeah.
Yeah, yeah.
In terms of customer service, what I found is that obviously you have an app. If you want to reach out to somebody,
Mhm.
who do we reach out to?
So within the app, we have a customer services team. So they normally operate between 10 and 6 every single day, weekdays, that is, and then reach out to you. So you can contact us via email, telephone, WhatsApp, all through the app. You also will be able to take our contact details as well. So myself, Fazil, would be more than happy to take any questions from you as well.
And then on the Wahid X side, then yeah, I'm the contact point.
Yes,
Are you both separate? Why are you separate?
yeah, he was part, and now he's my ex. That's why he's working. No, but it is separate entity because venture capital is obviously a specific part of the business, and this is why there is a distinction between the two.
There's a distinction, but we're still part of the
Same group.
company, and Wahid fully owns Wahid.
Yeah, it's a legal distinction.
How do we invest in your parent company?
Interesting, we're working on something.
Yeah,
so well,
at least the majesty.
so we're off camera. Yeah, don't worry, I'm working on something.
But I know a lot of people want to buy houses, right? And there's a good long-term investment they're renting. So do you have a similar model for people to buy their first home?
Okay, so this is something that we're working towards in the background. So when it comes to home financing, so we want to be on the equity home financing side, not debt-based. So Aziz will be able to tell you who's providing them. At the moment, there's Spider, there's Crowd to Live, Halo Homes, Way Homes, Stride Up. Gatehouse is Islamic Bank. There's a debt-based model. These are equity-based models. So essentially, these are startups that are providing this. I don't know if Curator doing anything.
You had them on the board, right?
Finance.
Yeah,
That's what you're.
Yeah.
So these are equity-based models where essentially you own a percentage of the house. Let's say a house with £100,000, you buy 10%. The remaining 90% you rent from the provider, and then you staircase every year. The market value of the property, the rental value that you pay is based on the market value of the property. So if it goes up, you pay more. If it goes down, you pay less. This is the most Sharia compliant way of buying a house, essentially, in our view. So we're supportive of this model. The issue is that the providers in the market don't have enough distribution to fund everybody. It's not enough money right now. To fund everyone's homes, you need a lot of capital, essentially. So we need the other players in the market to keep doing what they're doing, but also we're looking to provide a solution. The way we're starting is on the investment side first, so building up the demand from investors to invest into properties. So we're going to very soon be putting on investment opportunities to invest into property. So similar to crowdfunding for startups, we'll have Central London and Central Manchester for investors to start investing, earning 5-6% yield. Once you start building up, let's say 1,000, 2,000, 10,000 investors, then you can start providing financing for each other's homes, basically. And there's some interesting groups where we will partner with, essentially, to.
Wouldn't it be good if you link? I know you could obviously very easily come up with use that finance and come up with your own way home style platform. But to invest in existing platforms instead, wouldn't that be like kind of the vision of what we were talking about before, about supporting Muslim companies, supporting
most definitely everything's on the table. Anything can happen. I guess where we are is we're regulated, and certain other entities are not regulated. So it's from a legal side of things. It makes sense for us to own our own ecosystem from start to finish. So that's why we're going down this approach where. Obviously, Wahid's now global, and we've got a board that wants us to do things a certain way. So we have to own the whole ecosystem of being able to provide it. Is this scope for us to support and work with someone else? Absolutely, we will be.
No, I know you're not really in the home financing space yet, but there's obviously that gradual home ownership, legal technicality about whether you can gradually own the home with the tax laws up to 100%, and some of the companies like FIDA are operating in a space which is a bit grey, and the government could easily change some laws to tax everybody who's part of that. And obviously, I think that's something obviously you need to include in your vision, and hopefully there's more clarity on that in the next 4 or 5 years from the government.
Take the last couple of questions.
Just a quick one. You haven't mentioned Bitcoin. Do you invest in Bitcoin?
I think this one's for you. This is my favorite topic. Short answer is no. Long answer is it's not regulated. There isn't a general consensus in terms of it being Sharia compliant, and there's no liquidity. So when we look at any asset class, we take the amana of our customer base and our community very, very seriously. It's why until it's regulated, until the scholars there's a general consensus to say this is Sharia compliant, until that happens, we won't even consider it.
It's not Sharia compliant consensus.
There isn't a general consensus. Now, certain scholars, they say, yes, it is. Other scholars say no. But because of that, there isn't a general consensus. So until that happens, we won't consider it.
To be fair, I'm not going to lie. I know a little bit about investing for doing it a couple of years, and I don't even see crypto as an asset worth considering in detail, because you need to look at use case, right? So at the moment, what is Bitcoin being used for? Well, it's being used for illicit, transfer of funds. It's being used to buy, stolen art, that kind of thing. Usually used for nefarious purposes. Until the use case becomes more clear, and the risk is always regulation with cryptocurrencies, because you can't imagine a government to relinquish control over the interest rate. That's what control. That's why regulatory crackdown has begun. China has now restricted severely its usage. Even in the UK, it's severely restricted in its use. So I think we'll see that as a trend, actually. It won't be a trend up, it'll be a trend down. My gut feeling again.
That's what I want to hear.
Yeah,
Like Forex is haram, really.
yeah, I think let's call it now, inshallah.
Yeah.
Yeah, so inshallah, get all the details. I've got a group. Does anyone want to sign up for the WhatsApp? You can get in touch with me. I've got the WhatsApp link.
But